Hello, today is the 29th of February 2012, and this is part 3 today on this wild action ride. Now, on the weekly chart, if you're in the camp looking for confirmation or you're looking for a little bit of a pullback, you have obviously so far have gotten it. This previous level it really fast. We're going to take a look at today's intraday chart as well in a little while. But if you're looking for confirmation, you need to see it hold and stay above it for 5, 6, 7 periods, which is 5, 6, 7 weeks. We're at 2. We're in the second one right now. And so far today on the quarter day chart, that's a pretty decent sized move. So if you looked at the volatility earlier, it would have said small down below because it doesn't count the current time frame. Coming into the period, it was small. Coming into this period, it's obviously extreme. It's at the highest possible level. As the movement from bottom to top is 10%. 34 and change up to about 37 and change. That's 3 and change and 3 and change on 30 and change, or 34 basically. That's 10%. In fact, it's pretty close to exactly 10%. And I can quickly take a look at it in here. This is a chart I'm going to show you in a little while, but this is what calculates a percentage. I just want to get the exact number. 10.01%, because the lowest point 34.08, 37.49 is the high, and this is the current one, an hour and 15 minutes in right now. So the volatility extremely massive, and we're going to take a look at the volatility chart. Let's do that right now. The volatility tells us the highest point minus the lowest point, taking the data that you just seen in there. So this is the third time in the last year that it's made a run up, that making a 10% move in the last year after it was pretty much unvolatile. Because let's take a look at the previous two. This one occurred in here, which was part of that September smackdown. This one occurred within here, but notice the differences between the two. Here we had a lead up of higher volatility. Here it had a little bit of a lead up to volatility. This one broke the trend line and then massively had the higher volatility. For what recently occurred was the 5-day average of moving volatility not only made a new low, pretty much matched it, barely undercutting it, but the orange line, of course, clearly made a lower level. So what's going to happen from here is that, well, before, when we made 10%, you can see that we stabilized in an area where we previously had resistance. And here, for a little while, it stabilized where it previously had resistance. So for at least, again, a little while, I would expect this little area here, 2-3%, to be basically start to get quarter day moves every 6 hours, between 2-4% moves from the lowest point, and this should last on into the first few days into March as a minimum. And now let's move into the intraday chart for today. And this is from 9:30 a.m. to 12:50. So the first 200 minutes of the day today, each candle representing 2 minutes, 100 total candles. And within today's move, notice the size of move A. It was a little stronger for move B, and move C, thus far the largest move, has taken the cake. And after each single time, it had a sideways correction. B, it went up through price, followed by sideways. Still wasn't able to get past this band. And this one in here had an up move, sideways, and then it was able to get above the band, hold above it for a while. And lately, and since then now, it's consolidating in this general area. But I think the key important thing to note is that this happens quite frequently. We look at this quarter-day chart. Look at the start of this move here. So to think that we're down too much and it can't go lower, when you look at basically here's comparing it to here, or even to here. But there's been a lot of moves where we can see you come up here, you come down pretty fast. Here, down fast. Even going from here, that's like going from 36 and change down to 34 in a relatively quick period of time, at least a few days. So it's not uncommon to see these types of moves take place. Now, as far as the significant levels that I've been talking about, 33.58. Of course, that's the significant level from the. Let me draw it in here first. As the first Fibonacci level on the way up from here to here. So that what used to be resistance is now going to become support. The more shorter term level, which is this 34 and change, well, we've just had that test now. And when we go back now to the quarter-day chart, when we see what we have within this, for this rally to be a failed move, basically it needs to hold and stay below this level. And it's still unsure what this is going to be. For this level here that was supposed to be support, is now, if it gets up there, going to be that level of resistance. Coming up to this level, and then establishing this resistance band and coming back down towards this increases the chances that it takes it out. And if that is the case, then you could obviously expect for there to be another wave to the downside. As far as any rallies are concerned, you want to use the Fibonacci from this high and this low, and we've already seen that within today's quarter or intraday chart. So as far as any very short-term moves, the first significant level would have to get by was the one that's already tested. Therefore, getting by this level, you would be able to expect to find a level of resistance at 36.07. Thank you for tuning in, and hopefully this will be the last part today. Take care.